afternoon, everyone. It is Wednesday, June 14th, and I'm Coram along with Ken Shreve. We've got your look at the stock market today, where we saw a mixed session with the Nasdaq holding firm in positive territory by the end of the day, despite a hawkish Fed statement, Ken.
Yeah, so blue chips lagged a little bit. Small caps did too, but a good day of performance for healthcare stocks. And you're right, it was a hawkish Fed statement, and I would say a resilient performance for the stock market. I want to take a look at three healthcare names. First one's going to be Steris. STE is the symbol there. Also take a look at Stryker, SYK, and then rounding things out with Merit Medical Systems, MMSI.
Yeah, definitely a good day to be taking a look at medical sector stocks. So we'll get to those, but first let's take a look at the major indexes. The Nasdaq today up 0.4%. The S&P 500 fractionally higher as well, up less than 0.1% on the downside. We have the Dow down 0.7%. The Russell 2000. Small caps taking a bit harder of a hit today, but they've been rallying strongly for the most part. But today down about 1.2%. So to see this outside day, upside reversal by the end of the day for the Nasdaq seems pretty strong here, Ken. So what will stop this market if not a hawkish Fed statement?
Well, I have to say it was a little surprising. I was talking earlier today on IBD Live. What surprises could come from the Fed,
Right.
and they were, surprisingly more hawkish. I mean, this was the time when we saw the Fed dot plot, which is basically a summary of all the committee members' projections on where they see interest rates going between now and the end of the year. And what was interesting is they did raise their forecast for the Fed funds rate all the way up to 5.61% by year end, and initially the last dot plot it was around 5.1. So now we're kind of looking at the Fed is kind of insinuating that there may be a couple of quarter point hikes before the end of the year, and but they just did let the market know there was talk about being called a hawkish pause, and it certainly was a hawkish pause because they left rates unchanged this time around, but looking like there could be more than one rate hike between now and the end of the year, which is a change.
Let's also take a look at the intraday chart here for the Nasdaq, because as expected, volatility made its way into the market today. So here's a look. I think we can kind of tell when the Fed statement and Powell's press conference happened, Ken.
Yeah, no doubt. And I think I don't know how far down the Nasdaq was. It was at least 5 or 6 tenths of a percent lower, maybe even a little longer than that. But it did rally nicely into the close here. You can see the last half hour of trading thereabouts. Nice buying into the close. So once again, we're in a confirmed uptrend. There's a lot of people that just don't believe this rally. Yes, we're looking at a Nasdaq that is getting quite extended from its 50-day moving average. Buyers are in control. We got multiple up weeks in a row for the Nasdaq, so we're kind of waiting for a pullback, but everybody's waiting for it, and it just keeps going higher. So it's kind of typical of the stock market.
So in terms of what we should be doing now, Ken, should we perceive the Nasdaq's reaction today as bullish? And if so, what does that mean in terms of exposure? Just let winners keep working until we see signs of exhaustion and reversals?
Yeah, I think that's exactly right. What you just said. I mean, we just look at our leaderboard model portfolio right now. We still have so many stocks that are, holding above short-term moving averages, just like the indexes here. The distribution day count, the way we monitor kind of institutional selling in the market, that count has been getting lighter and lighter. It was possible we could have seen a distribution day today when the S&P and Nasdaq were each down about half a percent or so. Volume was tracking heavy, but we avoided one today. So I think the takeaway from today's market is that, obviously the confirmed uptrend is still very much intact. It is getting a little harder to find stocks that are still in range. Almost feel like you'd be chasing at this point, just because of the scope of the rally. So I'd be careful with new buys. But if you're seeing stocks that are kind of coming out of these consolidation, early stage moves, early stage breakouts, those are still okay. But just as always, be cautious with the new buys, and and so we usually say start small, but with the market acting so well, I mean, you could even start with a 5% position here and see how it goes.
Sounds good. Let's also take a look at the S&P 500. Just need to navigate on over to my chart here. There we go. Now it's coming up. So you can see a little bit of volatility today, but talking about holding firm, I mean, the S&P did too, shaking off intraday weakness and closing the day just fractionally higher here, Ken. So this is a slightly delayed chart.
Yeah, and looking like volume could end up being lower than what we saw yesterday. Just looking at the volume bar down at the bottom there, but you can see the S&P did close off its low, and the market showed strength again. There was a time when the market would be selling off furiously when it's sensing interest rate hikes by the Fed or a hawkish Fed statement. But I think they're acknowledging right now that we're still seeing a fairly robust jobs market, and the Fed is worried about that. It's worried that the market is going to stay strong, that unemployment is going to stay low. So I think they're just preparing the market that inflation could be a little sticky here. So we'll probably see more than one rate hike before the end of the year. But right now the Fed's looking at two more quarter point hike. So a combined 50 basis points to go. And that is a change. And I think the market had reason to sell off, but it showed strength again today by recouping losses.
Right. And the market did only have 2 hours to start to digest this news. What should we expect for tomorrow? Is there going to be a continuation of this reaction playing out, a counter reaction? Should we be worried about that? Where do you stand, Ken?
Well, I wish I knew. No one would be surprised to see a distribution day here, a higher volume decline. No one would
With
be
or without the Fed in the mix,
That's
I
right.
mean,
That's right. That's right. And no
yeah,
one would be surprised to see some profit taking hit some of these top
right.
performing stocks that have been doing so well recently. So we'll see what tomorrow brings. But I still think there are reasons to be optimistic here with just about everything out there holding above short-term moving averages and showing strength and support, whether it's individual stocks or the indexes.
And here's a look at the DIA ETF tracking the Dow. Ken, your thoughts on blue chips here?
Well, United Health was the drag on the blue chip index today. They were just talking about all of the senior population that's going back and getting a lot of elective procedures done. So that's going to result in rising costs for a lot of health insurers. But there was a big, broad-based rally in a lot of other healthcare stocks. So kind of
Right.
bad news for UNH was good news for other stocks. But again, the Dow after multiple up days in a row, kind of holding above support levels here, closed off lows, looked like a fairly orderly pullback, even though it was down about 0.9%.
And what about small caps? Here's IWM. This tracks the Russell 2000. A harder hit here than elsewhere in the market today, but putting things in perspective with a look at the weekly chart here, Russell still working on 5 weeks up in a row, up 1.7% last week and 3.3% the week before.
Yeah, so back to the daily chart here of the IWM. I mean, this was a pretty sharp decline. It was a bullish move for the IWM yesterday with some volume, but volume was pretty heavy today as it kind of went back down. So kind of a big intraday range for IWM. But again, similar theme here, not or still holding short-term support levels. So this was probably the most volatile area of the market today. Small caps, we just looked at the Dow. That was more of it seemed like an orderly decline, but small caps selling pressure was a little more intense, and you had financial stocks that were weak and tends to be moving. Small caps and financials tend to be moving in lockstep these days.
And we also want to take a look at 0TNX. This is the 10-year treasury yield in Market Smith. And we can also look at an intraday chart here to just see the reaction there in the bond market, Ken.
Yeah. So the bond yields were they were volatile today, but you can see they definitely came under pressure. At one point, they had recovered well off lows for the second day in a row, but some selling late knocked the bond yields lower here. So we'll see. It's getting up pretty close to some resistance around back to the daily chart.
Hmm.
3.8 I think is a recent high that we're looking at there. Uh, I need to
It
zoom this
is.
chart in, yeah, but
Yep,
so
3.8.
anyway, so bond yields are still in focus here, but did give back some gains today. To continue to watch this on a daily basis as well.
All right, well, let's get to those medical sector names, starting with STE. This is Steris trying to break out of a cup with handle base. Now, if we look back in mid May, we got a nice move on the earnings report, shares up almost 10% on the day in some strong volume. So, this one has a pretty nice volume profile if you're looking at the last couple of months of action and compelling action from a price perspective as well, Ken.
Yeah, I mean it's a pretty clean breakout to today. Steris is a provider of surgical products. Really, their specialty is infection prevention services. So as more people are going to the hospital and getting procedures done, again, resulting in higher costs for some of these health insurers, but names like Steris could be a beneficiary here. So good clean breakout over that 212.81 pivot. Closed a little bit off highs, but you're right about the volume profile. The accumulation distribution rating of B plus. Is helped by some above average volume gains recently. So this is a stock that obviously is still well within that 5% buy zone here. So a good mover today. With some volume and not the fundamental powerhouse that we like to see. The revenue growth has slowed down a little bit, but nice acceleration in the most recent
Mhm.
quarter, and some decent, not spectacular annual estimates, but low double digits, so still looks pretty good.
Right. And I guess we'll have to see in terms of this UNH news what the real ripple effect impact is for companies like this. We're next going to hear from Steris in early August. So we'll have to see if we do start to see the trends that UNH is talking about with more of these elective procedures impacting, the top and bottom line for Steris and others in the sector.
Yeah, it was a good day of outperformance today from a lot of these stocks, but again, we've seen these rotations in the market. So healthcare
Mhm.
stocks saw some good flow today, but as to say, the Nasdaq did. Tech stocks held up pretty well as well as we discussed when we were going over the Nasdaq.
Yes. Let's also look at Stryker. This is SYK, a move of 4.2%, strong volume behind the move as it retook the 50-day.
Yeah, maker of orthopedic implants, kind of a similar business to Zimmer Biomet, but Stryker gapped above its 50-day moving average here, closed off highs a little bit, but this is just a nice little base taking shape here. So you could put this one on the watch list and see if it can handle this 300 level. But as it approaches that left side high, maybe it'll kind of drift lower. So I think it's a good one to watch. It's one of these stocks with a really good earnings stability rank. If you go to the weekly chart here, just really known for a good long-term track record of earnings growth. So, steady Eddie here, and technicals on the weekly chart looking pretty good here. So, could see an upside breakout here. We'll keep it on the watch list.
So that brings up a good question in terms of when this stock is actionable. I guess it depends on how aggressive you are. Maybe some triple traders nibbled today with the gap up, but what would you be looking for here, Ken? Just more progress on the right side of the base?
Yeah, exactly. And I think it showed today that it got pretty close to that 300 level and then got turned away. So there were sellers kind of around lurking when it got close to 300. So again, this looks to me like it's going to consolidate for a little while longer below this 300 level, but maybe that 300 level will be the real breakout point to watch here. So just watch the stock over the next few days and see how it digests the gains from today. If it can hold above today's low and kind of just sit right below that 300 level, could pave the way for a nice breakout.
All right, let's round things out with a look at MMSI. This is Merit Medical Systems in the medical products group. A move of 0.75% today, some strong volume coming into this stock here. Ken, we can also take a look at this on a weekly chart, and it looks like a pretty orderly pullback to the 10-week line here for
Yeah.
MMSI.
Exactly, and the pullback came after a breakout from a pretty well-formed double bottom base. You had two legs down, and the second leg down, and then the stock really started to rally, and it broke out several up weeks in a row. But this is what a good orderly pullback looks like, or what it should look like. So this is a good test of the 10-week moving average here, holding support for now. Maybe just waiting for a little more, another pop of buying, so that this weekly chart can show a nice blue up week this week. But it's a good test going on right now. It's another fundamental stock that's got a good consistent track record of earnings, and in a good technical setup here. Just testing that 10-week line, and let's see if it can bounce and show even more support.
All right. Thanks, Ken. Well, that is it for today. Thanks so much, everyone, for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live, for all the details. And be sure to check out investors.com/events to stay up to date on all the latest events from IBD, investors.com/events. Thanks, everyone. We'll see you tomorrow.